The Responsibility of Investing is a podcast by the PRI, the world's largest global body on responsible investment, representing over $128 trillion in assets under management. Each episode features conversations with thought leaders and experts from around the world, exploring how sustainable factors are transforming the investment landscape. This series helps PRI signatories and the wider investment community navigate responsible investment with greater precision and confidence for the benefit of both investors and society.
Welcome back to ROI, the Responsibility of Investing. I'm Kate Webber, Chief Solutions and Technology Officer at the PRI, and today we're diving into a topic that's transforming private markets: sustainability as a driver of financial value. From climate and nature to social impacts, sustainability is no longer a nice to have. It's a strategic imperative, which investors increasingly see as central to long-term value creation. And yet, many still struggle to quantify its financial impact, including in private markets. So today, we're unpacking the latest insights from the first report to be released by a new global PRI-led multi-year value creation programme which tackles this challenge. This programme currently involves over 400 investors. We'll also explore how sustainability is shaping value creation across regions, sectors, and investment life cycles. Joining me to discuss this is Aditya Vikram, Head of Private Equity and Private Debt at the PRI, who led this project in partnership with Bain & Company, a consultancy, and NYU Stern, Centre for Sustainable Business, our project academic advisor. Aditya, welcome.
Thank you. Thanks for having me on this podcast, Kate.
It's a pleasure, and I'm very excited to dig into this topic. It's one that's really evolved, hasn't it? Today's topic is about private market investors using sustainability to drive financial value, and it's a really big topic. So I think we're going to break it down. So, again, pleasure to have you. This is one that's really evolved, hasn't it?
It has, absolutely. And evolution is the key word there. I think about when I started out in private markets back in 2007. And, those were the days when we didn't talk about sustainability or didn't use sustainability as a word. And I remember the very first transaction that I did. It was in investment into a agri-manufacturing company, and they were producing sugar and ethanol using sugarcane as their primary input material. And so, I was a young analyst in the firm. I was focused on creating value for my investors, for the company. And, we were just focusing on things like reducing costs, driving profitability and returns, and finding new revenue opportunities as well. So one of the ideas that I came up with and we discussed with the company was how to use bagasse. Essentially, that's the waste you are left with when you extract the juice from the sugarcane to produce sugar. So how to use bagasse, which we were throwing away at that time, to generate fuel. Classic waste to fuel play. But then, as I said at the beginning, we had not even thought about sustainability or using it as a buzzword back then, but it was essentially what it was.
Yeah. So back then it was just good business, and nowadays we call it sustainability.
And very true. And now I think it is right front and center. Investors are looking at operational transformation and not just financial engineering, especially given macro headwinds, interest rates where they are as well. And I think also the mindset has shifted. Sustainability is increasingly about enhancing the business resilience. Resilience against, say, reputational, regulatory, or supply chain risks. And also capital formation is adapting. We are seeing increasingly more capital deployment despite the macro headwinds into private markets. So capital deployment in private markets rose in 2024. LPs are increasingly looking to deploy more money with GPs who are much more, I would say, mature in their sustainability practices.
Very good. Now, for those people who are not, private equity experts, an LP and a GP are?
An asset owner and an investment manager in the
Brilliant.
normal term. Yes, thank you.
Brilliant. So what we're seeing is the tools becoming more sophisticated, right?
Indeed. So, and you are closer to the data world than I am, but clearly we are seeing more proliferation and usage of data, AI, analytics to spot sustainability risks and opportunities across the value chain, scenario analysis, impact measurement, you name it. But the key with all of this, and then using sophisticated tools, is transparency and data integrity. If you don't have it, as an investor, then you are opening yourselves to accusations of greenwashing. And I think we are seeing a real shift, when we talk about tools and sophistication in the way people are talking about sustainability, or from just talking about it to actually embedding it in their value creation plans. Probably not a box ticking exercise anymore. It's about driving real world, meaningful, measurable outcomes.
That's so interesting. So, and you mentioned there about value creation. So if I think about value creation, let's dig into some of the work that you've been doing. So can you sort of give me an overview of this work?
Sure. Let's do that. I mean, we ran a program with almost 400 plus investors at the PRI. It was a PRI-led global program around sustainability value creation in private markets. And, the data was pretty clear when we thought about this program in the first year, last year. The majority of investors now see sustainability as a key driver for financial value. And, that's not just today. They are also anticipating greater returns in the future. And, you would think it's all about Europe. But we're not talking about just Europe either. There's been a global shift in the first phase of the program that I just told you about, the Sustainability Value Creation Project. We talked to almost 400 plus investors. That's a massive sample size.
That's huge.
And as I mentioned, it was not just European. We talked to North American investors. We talked to investors in LATAM, Africa, Asia. Everywhere we saw investors in hundreds participating in the project. And so you see it. Sustainability is a key value driver across all regions, across the globe. And investors are willing to engage and talk more about this topic.
So sustainability is really becoming that value creation element. So I think you've got some big numbers that we're going to talk about through this podcast. So tell me about those numbers we're going to dive into.
Definitely. And for listeners to our podcast, if you want to take away a few key messages, a few key numbers from this, I'll point you to 3 key data points. I'll point you to 2 key updates, and I'll point you to 1 message for you to take away. So here is the first data point. And this is based on the work that we did in the first year. Almost 72% of investors whom we spoke to believe that sustainability has a moderate to significant impact on financial value today. And most of them also expected that returns and that impact to grow over the next 3 years. The key topics today, as you would have anticipated, it's more responsible investment related, so responsible business practices, transparency and risk management, things like customer safety and engagement. But then looking ahead, energy consumption, greenhouse gas reduction are expected to take the lead. Almost 80% of the investors we spoke to said those were the 2 key topics and the top topics for value creation for them today. And this is talking about the private market investors whom we spoke to during the project.
So first data point, 72% of investors.
Definitely.
So as we drive through, what are the top value drivers for you?
Again, it's a great question. And then we are seeing a bit of shift there. So, for today, for example, it's more customer driven, like customer value proposition, process efficiency, an obvious one, and enhanced customer trust. But then in the near future, we are seeing things like higher employee engagement, productivity, employee retention. So things more on the social side are expected to be the top drivers. And I'll bring it to life with an example. So I was speaking to an investor as part of this project who put investment into a clean air company. So this company makes air quality equipment, like literally saving lives with the equipment that they generate. So what was fascinating, we learned while speaking to the investor, was how the mission of this company became a key motivator for their employees. It wasn't just all about the product. It was about the purpose. And that, in turn, led to higher engagement. better retention, improve productivity. So, this is a great example where you can see both business drivers and financial outcomes working together.
And you can see the sustainability aspects and how engaged people are in doing that because they feel like it's part of their culture.
Definitely.
That's a great example.
Yeah.
And it's not just about ticking boxes for sustainability or responsible investing. When you get it right, it's about value creation. It's about that engine for investors and businesses and people who work in those companies themselves. So here's the big question, right? How do you translate that into measurable outcomes?
It's a great question and one which we are trying to solve with the help of investors. But that's where I'll admit things get tricky.
Yeah.
I think in general, I would say Europe is leading the way by embedding more sustainability activities throughout the private markets investment lifecycle, especially I would say during the early stages, the due diligence phase, as we call it, or during the later stages, the exit phase, as we call it. They're ahead of the global average, investors in Europe.
And that's during the due diligence, so that's
diligence
the upfront
and
part.
Throughout the life cycle, but more stark during due diligence and exit phase.
Okay.
And I think also the reason why they're ahead of the global average is probably due to higher public and regulatory scrutiny, which we are seeing more so in Europe than in some other jurisdictions. That's absolutely understandable. But then even in Europe, and frankly, really across all regions and investment firms of all sizes, there's a big challenge, quantifying the financial impact of sustainability.
Yeah.
So here is the second data point that I wanted you to take away. Only a third of the investors are actually analyzing the financial impact of environmental value creation in their portfolio companies in terms of either the portfolio company top line, bottom line, or even exit multiples. And guess what? It's even lower for social and governance topics. So measurement, as I said earlier, it's clearly still in its early days.
So that's really interesting. So our first data point was around the 72% of investors who are saying this is absolutely critical. And the second data point is, but actually only a third of them are able to measure it.
Exactly.
So we've got that big gap.
Big gap. And that's the gap which we are trying to solve and trying to solve as the PRI.
So as you know, I really care about data. It's really important. And I genuinely believe that if to measure something enables it to happen. So talk about some of the data points and the measures that you're trying to pull through as part of this work.
Definitely. And there are challenges with, value creation, and there are reasons why investors face struggle and challenges in terms of quantifying the social impact. And these challenges are consistent. You might have heard about them already, like data quality, lack of standardized frameworks, very simply just connecting the dots between sustainability to ROI, return on investment. And that's why we came to what I call the PRI solution, or supporting our investors in this challenge. So here is our first update. We are coming out with a practical guidance, an actionable holistic framework, which we call the Sustainability Value Creation Framework, in our first phase very shortly. And, hopefully that will help investors with some of the challenges that I spoke about. It'll give them a common framework, a common language to think and talk about value creation. Here's the second update. We have listened to investors. The 400 plus investors who engaged with us in this first phase have come back to us and said this is so useful for them and they want us to do more. They want us to help them further. And hence, we have devised now a 3-year value creation program for private markets, trying to address some of these specific problems and challenges we heard from investors. So for example, in the next phase, phase 2, which we are starting immediately, we are doing a deeper dive into quantification with industry playbooks, methodologies, and case studies. And finally, in phase 3, down the line, we will look to do more robust quantitative impact assessment. So it's a journey. It's not a quick fix. So again, the 2 key updates. 1, we are coming out with the guidance. 2nd, we have started work on phase 2. And, we ask all investors, if you are interested in the topic, get in touch with us. Our contact details will be in the show notes. Please feel free, drop us a line, and we'll engage with you.
So this is how we fix between those 2 data points of 72% of investors being really interested, but only a third being able to calculate that today, by the creation of the value framework, value creation framework, and then engaging with signatories all the way through. So can you bring it to life for me with an example maybe?
Definitely. This is a great example because it's not a sector or an industry where you'll automatically think that, hey, sustainability is going to lead me to tangible financial outcomes. So we spoke to an investor in Africa, and I was saying it was in the financial services sector, a company in the financial services sector that they had invested in. And, I wouldn't consider intuitively that to be a poster child for sustainability value creation, but this one really stood out. So this investor whom we spoke to, their key sustainability goals were reducing gender inequality, mitigating climate change, and cutting waste. And what was impressive when we spoke to them was how they integrated sustainability throughout the investment lifecycle. So, they started out by assessing risks and opportunities during the due diligence phase, the one which we spoke about earlier. But then they went ahead and incorporated those into their value creation plan. So remember the 72 and 1/3 that we talked about? They're probably an outlier because they went ahead, integrated it into the value creation plans. Then they even measured and monitored progress during their holding period being when you actually manage the investment post-investment once you have put the money into the portfolio company. And all the while, they worked very closely with the portfolio company, senior leadership, the deal teams, the middle management of the portfolio company on strategic planning and implementation. So they basically focused on things like gender equality and financial inclusion. They did things like gender pay gap assessments, maternity support, things like external pay reviews, things that will come to your mind just to make sure that, for example, their lowest paid employee earned an average of 5 times the national minimum wage. And the results, you ask it? Amazing. 44% increase in female participation in the workforce, 20% improvement in the gender pay gap, and an 80% improvement in the employee churn rate. Quantifiable financial outcome that's not just good for the society, good for the company, good for the investor, and good for the clients and beneficiaries have put money in the investor as well.
So through the due diligence stage, they set their targets and then they went and they were able to track their targets and then really see how it made such a great impact across that organization and the wider society within which they operated.
Agree.
Great example.
Yes.
Great example. So in sectors, even those sectors that you might not expect it to be, sustainability can be a real lever. It really can create value creation, but it takes a commitment, a structure, this value framework that you've been talking about, and a willingness to look beyond, say, the obvious.
Exactly. I think it's not just all about numbers. It's not just about financial returns. I think if you look beyond the numbers, if you look beyond and see, for example, a case that I discussed just right now, lower attrition, higher employee morale, it'll automatically translate into better business performance over time. So, it's a no-brainer. It's a win-win for investors to try and integrate sustainability into their value creation plans, try to follow through, measure the tangible financial outcomes that they can drive from it as well.
That's great. And so, that is a fabulous example. How are the PRI helping to bring this to life?
As I mentioned earlier, it was very clear to us from speaking to investors that a holistic approach was needed to solve some of the challenges. For example, if you are an investor and you're focusing only on the front end, you are going to miss out on the real value creation that happens in the private markets investment life cycle in the holding period. So as I said, we are releasing our sustainability value creation framework and guidance. First update. Second update, we've already started working with investors on the phase 2 of the project, trying to quantify sustainability initiatives early in the investment life cycle. I think, as I mentioned earlier, we need everybody's support. This is a collective effort.
Yeah.
Please get in touch, reach out to us, share your stories with us, and we'll all get on this journey together.
Okay. So at the beginning, we talked about 3 data points, 2 updates and a message. So let's go through those really clearly again. So first data point, 72% of investors. So let's recap. 72% of investors really want to focus on sustainability.
Yep.
Next one.
Ones that only are actually trying to quantify or assess the financial outcome of, say, environmental factors on value creation, and even lower for social and governance related topics.
Okay. Third data point?
So the third data point was when we talked to investors, we figured out that almost 60% identify risks and opportunities and discuss them with their investment committees. That number drops to only 40% who actually assess financial materiality of these sustainability topics early in the holding period. So you see, 60% pre-investment, immediately post-investment drops to 40 who are assessing the materiality, and which we consider key, right? Financial materiality of sustainability risks and opportunities.
So that's interesting. So they're better on the due diligence stage, but during the holding phase.
Exactly. And then that number drops further. It drops to 30% who are actually allocating either CapEx, just to do more investments, or OpEx to sustainability initiatives. Even lower, 20% are actually benchmarking financial performance before jumping on any sustainability investments. So you see that how it drops 60 before investment, and then 40, 30, 20 on some of the key data points, which is where we need to shift the thinking.
Hence why we have the update, which is we're creating the value creation framework. And then your second update is...
Exactly. And I'll come to now the final key message. And it's a big message, and I think responsibility for all investors. We are on this responsibility of investing podcast, and so here it is. We should all endeavor to capture a lot more of the financial value from sustainability. Clearly, and everybody will agree with me, there's a lot being left on the table. Yeah. Investment firms are doing a great job, I would say, integrating sustainability into their practices. But as I explained with those numbers, the three key numbers that we talked about, there's still a lot more that can be done. So as I say, let's not miss the opportunity. There's much more we can do. We are here to support you. Let's fight the good fight together.
And so we always ask at the end what your key message is. And within the context of our podcast, which is titled ROI, which is very, very key for this particular podcast itself, our podcast is the responsibility of investing. And what you're saying is there's still far too much money being left on the table.
Exactly. I think there's a lot more that can be done by investors to extract more financial value from sustainability by doing value creation initiatives. Let's get our act together. Let's work together and extract more value. Let's not just leave it there at the table.
That's brilliant. Thank you, Aditya, for coming along today. Really enjoyed speaking to you. And I hope that everybody will be actively engaged in our value creation framework and want to find out more.
Thank you so much. And again, pleasure being here with you.
Thank you.
Goodbye.
Bye-bye.